Good morning, everyone. Thank you very much for joining us on today's episode of True Potential's Money Markets. In today's video, we'd like to cover what's coming up in the week ahead. Before we get into what's coming up in the coming week, we'd like to cover what happened during UK bank holiday on the Friday, where we had two important inflation data points released. So that was from Europe and also the US. So if we start first with that European component, we saw Italy and France release inflation figures, and the general theme that we've spoken about in these videos of European disinflation continued. So seeing that rate of inflation fall, and what was important for the markets and investors is that those rates of inflation were actually lower than what had been expected. So disinflation, that still holds within Europe. Looking at the US component next, we saw PCE inflation release. So that's the Federal Reserve's preferred measure of inflation. And what we saw was that headline came in at 2.5% and core coming in at 2.8%. So that's broadly in line with what markets had been expecting. However, if we break those figures down and look at headline on a month-on-month basis, we saw that come in at 0.3%. And markets had been expecting 0.4%. So when the Federal Reserve had talked about the inflation numbers in January and February coming in higher and that being attributed to seasonality, that adds credibility to that statement that we're seeing that month-on-month number fall below market expectations. Now, pivoting and looking towards what's coming up this week, we have ISM data from a number of different regions. Now, these are the final prints, and that's coming from the UK, Europe, Japan, and also China. So what this data does for investors is breaks the economy into its two components, manufacturing and services, so investors can get a gauge on the relative strengths of those parts of the economy. In the US, we don't have a PMI, but we have an ISM coming up. So that provides us similar types of data where it's broken into the manufacturing and services side of the economy. Now, the manufacturing data has already been posted, and that came in at 50.8. And the way that these indices work is that if the number is greater than 50, that signals expansion. So we're seeing that line up with the PMI data that's already been released for the US, where we're seeing the manufacturing side of the economy start to improve and its strength pick up. Moving on, we have employment data from Europe and also the US. So within the US, we get non-farm payrolls, which is on Friday, and markets are expecting that number to be positive. So continuing to see jobs added to the US economy. And finally, we have European inflation. Now, this is an aggregated measure, so bringing together the different regions, Italy, France, Germany, Spain, etc., into one aggregated measure of inflation, which is what the ECB will look at when setting its monetary policy. And once again, that theme of disinflation expected to continue. So that number is expected to be lower than what last month's inflation reading was. So thank you for watching today's video, and we'll continue to provide you updates on these data points throughout the week.